Today I'll be revealing my £289,000 investment portfolio at the age of 33. In this video there'll be absolutely no holding back. I'll be diving into my stocks and shares ISA alongside going through the details of my investment portfolio, crypto assets and a few other investments that were actually made by mistake along the way. Okay, so kicking things off we have my stocks and shares ISA. This is something that I've invested into every single year since 2017, and just like everyone else, I wish of course I'd started it sooner. However, in those 7 or 8 years, I have stayed pretty consistent, and for me, so far, I think it's paid off. Now, when it comes to the account I use, I hold all of my investments inside a Vanguard stocks and shares ISA, and I have my money allocated across 3 different assets. The first of which is VUSA. This is Vanguard's S&P 500 ETF, and it makes up the biggest chunk of my ISA at around £44,000. The S&P 500 has been a real powerhouse for me over the last 5 years, with 4 out of the 5 years bringing double-digit returns. Now, for those unaware, the S&P 500 basically tracks the performance of the top 500 companies within the US stock market. That's all I'm going to say in this video. I do have another video on the channel that goes more in depth on this, which I will leave in the description for you to watch later. One thing I will just touch on quickly is, why do I allocate so much of my stocks and shares ISA into this fund? Well, aside from the fact that I've just mentioned it's a great performer and it doesn't take a genius to work that one out, the main reason is actually because it gives me really good exposure to some of the biggest companies in the world without having to invest into them individually and keep track of them one by one. But even with the great diversification that this fund does offer, I'm not going to be putting all of my eggs in just one basket, or in this case country, which is where the next investment in my ISA, which is VMID, comes in. This is a FTSE 250 ETF, which essentially means it invests into mid-sized UK companies, and whilst I don't put as much into this one, it's still really important for diversification purposes so that I can get some exposure to some companies this side of the pond. Now, just moving on to the cash that's actually sitting in this account as well, it's definitely not there just by accident. Basically, over the last 2 years, in a bid to make my investing strategy much simpler and streamlined, I've actually been consolidating all of my stocks and shares ISA account into this one Vanguard account, and basically, when you transfer over individual stocks to Vanguard, they will actually get sold and converted to cash. This has then left me at the start of this year with a big chunk sitting in my account, and every single month since, I've been reallocating around £1,500 of it each month into my different funds. Realistically, I should just put it all in at once, because with my goal of not touching it for the next 20 years or so, it really won't matter. But from a mental standpoint, it's been really nice putting in some money every single month, because over the last 12 months, I haven't actually been able to add any new cash, and I'll get into the reasons why I can't do that very shortly. But just to sum things up with my ISA, I have around £51,000 split across my 2 different funds and around £9,000 in cash that is ready to be invested. It's a mix I'm pretty happy with for now, but I'm always keeping an eye on it and adjusting, of course, when needed. Moving on, the next thing in my investment portfolio is the rental property that I own. Essentially what I have is a 2-bedroom, 2-bathroom, 3rd floor apartment in the middle of Norwich city centre, and I recently got this valued at £210,000, and with this investment there are definitely some good sides and also some very bad sides to it. Starting off with something that is very good is that this property for me now is completely mortgage free, which may be a clue as to why I haven't been investing as heavily in the stock market this year. But one slightly bad thing is that whilst it is valued at £210,000 and I have no mortgage, technically, I can't even sell this property even if I wanted to right now. This is basically because after the Grenfell disaster, all apartment blocks, rightly so, now require what is called an EWS1 certificate, which is basically a fire safety assessment, but much more in depth. And because of the amount of certificates and inspections taking place, just have to imagine all of the flats across the UK or the apartment blocks, the backlog for this is absolutely insane, and thousands of property owners are stuck in the same boat, unable to sell until they get this small piece of paper. Essentially, what mortgage lenders are saying is that they will not touch any property like this with a barge pole, and there's little to zero cash buyers out there unless you ridiculously discount the price so it makes it quite attractive to them. But honestly, I'm not really too worried about this. I have absolutely no plans to sell this property anytime soon, and when I look at the numbers, it's actually doing pretty well for me. Currently, right now, I'm receiving £1,300 a month in rent, and after I pay all the service charges and the other different fees, I'm left with around £11,000 £1,000 every single year in profit before I pay any tax. Over the last few years, I've been able to use this money to reinvest back into my portfolio, and as I have increased my margins this year with the mortgage stuff, I can only increase that investment in the future. One thing I do have to say is that since owning an investment property, there has been many lessons that I've learned, and it's not as straightforward as these online property gurus seem to make it out to be. There's always going to be different risks to consider. I've experienced a net loss in the value of my property. I didn't expect the maintenance costs to be as high as they were, and of course, as we've seen with this EWS1 situation, there can be so many unexpected hurdles that make it less liquid than potentially other investments. But I also have to say, as a whole, the steady income has definitely been worth it. I'm very lucky to have some amazing tenants, and it's nice to know that even if the stock market is having a bad day, or if I maybe lost an income stream, I'd always have this as a bit of a backup. Moving on, let's now talk about my crypto investment, which realistically has been a little bit of a set it and forget it kind of thing, and I haven't added anything to my account in pretty much over 5 years now. However, when I did decide to open up my Coinbase account around about 2017-ish, I have managed to build up my initial investment of around £300 into the £3,795.89 that my value is saying at the time of recording this video. In terms of the holdings within that account, around 95% of it is contributed to Ethereum, with a small portion in Cardano, Bitcoin, and yes, I even have some Shiba Inu. One of the many hard lessons that investors like myself has definitely learned along the way. Which I guess leads me nicely to talking about why crypto is such a small part of my portfolio and why I never really have any plans to add to it. And it realistically all comes down to one thing, and it's just simply managing my risk. I'm currently at a stage in my life right now where my main focus is purely set on increasing my income and using that surplus income that I do manage to generate to invest in steady growing assets. And for me, whilst crypto has ridiculous potential, of course we all know that, it doesn't suit my boring and well-structured model. For my football friends out there, I'm trying to be like Chelsea under Mourinho back in the day, not Tottenham right now under Big Ange. But essentially, that's my little crypto experiment. It's my way of having some skin in the game without really risking too much at the same time. I do get friends ask me all the time about whether or not they should invest into some coin I've never heard of, and my answer is always the same. Always invest what you can afford to lose. It is essentially gambling. I would personally be putting my money into something a little bit more sustainable, both financially and of course mentally. Moving on, let's now talk about a couple of my other investments that I have, with one of them technically being a massive mistake that's actually turned out okay, and that's my watch. It's a black dial Rolex Submariner with a date, and I bought this watch back in 2015 for £5,300, and I only had one thing in mind at the time, and that was to simply look flashy. Now fast forward to the interesting part, little did this stupid idiot know at the time that whilst my reasons for buying this watch was all wrong, I was actually making quite a smart investment at the time. Now, as you may be aware, Rolex only actually makes a set amount of watches every single year, and the demand for them has risen significantly over the last 2 decades, which has caused the used market to increase steadily over time. Right now, the Submariner is one of the most in-demand Rolexes out there, and the prices for this model are pretty much all over the place. You can find them selling used for anywhere between £6,000 to £12,000 online, depending on the year, variation, and the condition, of course. But just to be on the safe side, I would say that mine is worth around £8,000 from the little research I've done, because I don't really have any intention on selling it. But with it potentially doubling in value over the next few years or so, I would have to include this in my investment portfolio, once again taking zero credit because it was a complete accident at the time. Another investment that I do have, which isn't a fluke this time, is some physical gold that I've got tucked away. I've owned this for over 20 years now, and when I did get it valued last year, it was actually valued at around £2,300, and since then the gold market has actually gone up quite significantly and it's had a really good year. But just like my Rolex, I don't really have any plans to sell this, as the gold I actually do own is more of a sentimental piece rather than something that I would wear out or maybe try and flip for a profit in the future. Which does maybe ask the question, why even count these investments if you are not planning to sell them? Well, for me, it's all about, once again, diversification. The thing about these items is that they do actually add around £10,300 to my overall portfolio value, and whilst I do hope the day never comes, they do act as a little safety net that's quietly growing in the background if things did get really bad. I'm definitely not suggesting that everyone should cash their emergency fund and run out and go and buy a Rolex or a bunch of gold bars. These are just a couple of investments that I've naturally stumbled upon due to my life choices, and they're just part of my own personal journey. Your investment strategy might and should look completely different, and that's absolutely okay. Now, there is one final thing that I did want to talk about, and one of the main reasons why I've actually had zero cash to invest into stocks this year, and that's the equity that I have in the house that I currently live in. This is because around 8 months ago, I recently put all of the spare cash that I had down into a deposit into this house that I'm sitting in right now, and since then I've spent most of my money doing it up. The equity that I've got in this house is at around £75,000 here or thereabouts. I never really know the exact number, but I'm not going to include my house or this equity into my investment portfolio, as my opinions on whether your home is an asset or a liability has changed slightly over the past couple of years. Yes, of course, it's really nice to have something that I can say that is mine, something that I live in, something that I've got quite a lot of equity in, and of course something that should or most probably will go up in value over time. But when we do compare assets versus liabilities, an asset should be something that puts money into your pocket, and looking at this property right now and probably for the foreseeable future, that is certainly not going to be happening. But what do you think? Would you class your home as an asset, or would you class it like me as a liability and something that you just have to live in? Let me know down below. Thanks for watching this video. I do hope it has brought some value to you in one way or another, like these kind of videos have brought to me in the past. I hope to do one of these maybe in a year or two, but other than that, take care.